5 reasons for the 2022 Canadian housing market crash. Weighed down by a 39-year high inflation, crippling supply chain issues, and a global food and energy crisis, the Canadian economy is far from being in its best shape. And one important sector is currently taking bad hits from all sides. That is none other than the housing industry, which according to the Royal Bank of Canada, is going through a historic correction. Canada's largest bank and several other financial institutions have warned investors to prepare for a tough ride as the unsustainable real estate activities of the past 2 years are about to culminate in a tremendous housing downturn. Already, there has been a 32% drop in home sales in the first 2 quarters of 2022 compared to the same period last year. The RCB predicts at least another 17% drop by early 2023. This would mean over 40% drop in home sales nationwide, worse than the 38% drop recorded during the 2008 housing market crash. The situation is already worse in more popular markets. According to the Toronto Regional Real Estate Board, there was a 41% drop in home sales in the Greater Toronto Area in June 2022, compared to the same period in 2021. The monthly market sales data from the board also revealed that detached home prices have fallen in all cities and towns in its coverage area since February's peak. The decline varies at different rates, ranging from a 7.2% drop in the west end of Toronto to a 38.5% drop in Bradford, Simcoe County. According to Kevin Krieger, the board's president, the sharp decline can be attributed to the mortgage rate hikes and prospective home buyers putting the decision on hold until the markets cool off. However, with an 8.1% almost 4-decade high inflation, Canadians need to brace for more interest rate hikes and more pains in the real estate market. You're welcome to Savvy Economist. In this video, we are going to be discussing 5 reasons for the ongoing crash in Canada's real estate industry. Previously one of Canada's most profitable industries, this buoyant industry has suddenly taken a nosedive, and many people are unprepared for what is to come. Please watch, like, and share this video, subscribe to the channel, and turn on post notifications for more videos. Without further ado, let's dive right in. According to the TRREB, Bradford detached homes that cost $1,534,718 in February dropped to $1,154,536 in June, a 38.5% price change. 2 other regions in the GTA also recorded an over 30% drop between February and June. Another 10 recorded over 20% drops, and none of the 33 regions covered in the chart showed any price gains. Though it is popularly believed that the real estate sector will always record price gains and never declines, this is exactly what is happening, and it is not stopping anytime soon. Here are 5 reasons for this historic crash. Inflation and interest rate hikes. To combat the 39-year inflation and sky-high prices, the Bank of Canada is attempting to slow down the economy by raising interest rates. Since the start of the pandemic, the Bank of Canada kept its benchmark overnight lending rate at 0.25%. But it has been rapidly raising its rate since March, when inflation started rearing its ugly head. In total, the central bank has raised its overnight lending rate by 2.25 basis points to 2.5%, significantly increasing mortgage rates, plummeting home sales, and negatively impacting home prices across the country. Between March and June, the central bank raised its benchmark interest rate by 1.25%, almost matching that when it announced a full percentage point raise on July 13th. That was the highest interest rate hike by the Apex Bank since 1998. If home prices continue to fall in response to the rising rates, there could be bigger price declines in the coming months. According to Governor Tiff Macklem, the central bank is not slowing down on rate hikes anytime soon. We continue to expect that interest rates will need to rise further to cool demand and achieve the inflation target, Macklem said. How high our policy rate needs to go will depend on how the economy and inflation evolve. Macklem also said he expects inflation to remain painfully high all year long. Rapid home valuation. In 2020, there were record home sales across Canada, which were easily smashed by the sales recorded in 2021 as demand remained at a fever pitch far greater than the supply of available properties. According to reports, the increased demand over the years has been greatly influenced by Chinese politicians looking to launder stolen money abroad to avoid imprisonment back home. This imbalance in supply and demand drove prices up. Between 2003 and 2018, home and property prices in certain cities increased by almost 350%. But many market experts warned of a severe downturn in the housing market. In 2017, David Madani, a senior economist at Capital Economics, warned of a severe downturn that could hit the Canadian economy as a whole. "I see a correction of between 20 to 40% in the Canadian housing market over 5 years," Madani told BNN in an interview. "In a speculative housing bubble, once prices stop going up, the whole reason for speculating in the market disappears," he added. Experts also warned that the heavily indebted and over-leveraged industry was simply going to implode on itself. The decline has started, and Canada's homeowners may be in for a greater economic woes. There is so much concern over the general state of the Canadian economy. As we discussed in one of our previous videos, the Justin Trudeau administration has increased federal debt per person by over $12,000, the third highest of any prime minister experiencing a recession since World War II. In addition to the skyrocketing prices back at home, Canadians have also had to contend with a rapidly declining global economy, a brutal food and energy crisis, and, most unfortunate, a brutal war. Add all these to the Prime Minister's highly unpopular policies, and one could see that Canadians have way too much on their plates. Politics and economics play a great role in the housing market everywhere in the world. For Canadians, these two crucial sectors have been nothing to write home about under Justin Trudeau. This brings us to our next point, the domino effect. As a result of the high inflation, asset prices are falling rapidly, which means there is less disposable income. Less disposable income means less spending and lower sales and profits for businesses. This, in turn, leads to job cuts and a spike in unemployment rates, which means people have no money to finance their debts or take on loans of hundreds of thousands of dollars to buy a home. Unfortunately, if these unfavorable conditions continue, foreclosures, divorces, a spike in crime rates, and drug and alcohol abuse will follow. Loss of interest and lack of trust in the system. As home prices continue to shoot up over the past years, many Canadians, especially younger Canadians, have simply given up hope of ever owning homes. A recent Scotiabank housing poll found that more than 50% of millennials in Canada have put a hold on purchasing a house until prices go much lower. But despite the recent drop in prices, many Canadians still can't afford to buy their first homes. According to a recent housing affordability report, almost 70% of Canadians are willing to relocate if it would mean more affordable houses. With inflation and interest rate hikes expected to continue all year long, it is safe to say there won't be any sudden recovery for Canada's real estate industry. As a homeowner in Canada, how is the ongoing housing market crisis affecting you, and how do you plan to sail through it? Please drop your replies and comments in the comment section below. You might just be helping a young homeowner or a prospective homeowner. If you enjoyed this video, please give it a thumbs up, subscribe and turn on the notification bell for more videos like this. Thanks for watching.